miners are the ones that pull it out of the ground. They're the ones that are going to make the lion's share of the money because they're the first to get it. They pull it out of the ground, they hit the market with it. Every step you go away from the miners, you get a little bit less return. So if you're looking for return, you go to the miners.
Here at the StockPulse Silver Symposium 2021 in Coeur d'Alene, Idaho. We've got Robert 𝙂𝙊𝙇𝙑𝙀𝙍, he runs goldandsilverpros.com. Robert, appreciate you making the trip here to Coeur d'Alene and the Silver Symposium, so thanks for coming back.
Thanks for having me out. Thanks for having me as a speaker. It's been wonderful addressing your audience. Lots of good people here. Lots of people coming up from Texas, which is fun. I see people from San Antonio, Houston, Dallas, Fort Worth, some people from all over the U.S. Investors are back at conferences, which is nice.
Yeah, we had to get back together face to face. So for those maybe who didn't get here and want to have a little knowledge dropped on them, listening to you is a pretty good thing. So
Thank you.
A couple of your speeches today, or I guess the last couple of days, and I think I'm kind of on the same page with you. So why don't you, let's take a step back and give a 36,000 view of Robert 𝙂𝙊𝙇𝙑𝙀𝙑. What does he think of the general economy and how it sets up for the metals moving forward?
So I think the general economy is running overheated, too much debt, obviously. For the first time in U.S. history, we have $180 billion of negative yielding corporate debt, which we've never had. And I was just talking with Economic Ninja about that, and we're not a negative debt nation. We're a positive growth nation. People aren't going to accept it here. They're either going to save or they're going to invest. We're capitalists. So that's not going to fly here like it did in Europe. So we were just talking about the Fed has no bullets. They have no interest rates to drop. If they tighten, the economy stalls, as we saw Q4 2018. What are they going to do? The Fed doesn't have any bullets. And we're having severe supply shortages. We have labor shortages. When in actuality, we have a lot of labor. They've given up. It's the people in the labor force have given up after a year. And all of these problems underlying the economy, which says that we're very sick. And when we're very sick, you need to contract. You need to allow bad companies to go bankrupt. You need to get rid of bad debt. You need to consolidate, companies down and trim things up. The problem is the Fed doesn't want to allow us to do it. They want to constantly pump things up, and people have gotten so used to that the corporates started pumping things up. Personal balance sheets, the debt has pumped up, auto debt, mortgage debt, credit card debt. So we're all running very thin where we don't have a lot of savings. So the slightest blip in the economy could cause, another big crash. And that's really what I'm worried about. We're just risk on right now. There's a lot of risk in the system. And I think for precious metals is a way to balance your risk. Because if something happens, those precious metals will do very well. They'll blunt the force of what's going to happen. Thankfully, we have gold for people who have investment capacity of size and savings of size. And you have silver for people who don't have a lot of money, but still want to offset some risk. You've got two plays that you can have there.
So where are we at in the overall cycle, do you think?
I think we're at the end of a couple of cycles. So every 4 to 10 years we have a recession. It's been about 11, 12 since the last one, so we're long in the tooth in this current stock cycle, this current bond cycle. But if you go back and look at conjunctive wave theory and you look at Sir John Glubb's research on nation states and how they do, we're in our third cycle, third 80-year cycle. So about every 80 years we have a severe contraction like the Great Depression or a Revolutionary War. Then you've also got the 250-year cycle of nation states where they have to take a step back. The United States is going to have to take a step back from trying to, one, police the world, two, trying to run their banking, use the dollar hegemony to basically run politics of other countries. We're going to have to take a bunch of steps back politically, economically, so that we can reset. And it'll be a positive reset. Get rid of all the things that we've done that haven't worked and that are not beneficial to the American people, and allow us to kind of reset and get our bearings, and then and then go forward. And cyclically, this happens to every nation state. The United States is not any different, and people just need to be aware of that and understand how these cycles work, so they can protect themselves when you go into sort of the winter period for a while, and then come out on the other side and have preserved some of your wealth and be safe through the transition.
You mentioned the word reset. It's an interesting word. Means a few things, I think. What does the word reset mean to you?
Reset means to me that the world financial order in terms of the banking system, the fiat currencies, is overheated and needs to be redone.
Is it a reset to gold? Is that?
Some people, I think it's half and half in terms of viewpoints. Some people think that gold will come back in the system and support it. I've talked about Basel III and how gold will be considered a high quality liquid asset on the central bank's balance sheets and commercial bank sheets. And so I think gold will play a big role in whatever reset we have. But the central banks want to do their central bank digital currencies, and they don't want people to have gold. So the banks would have it, the people would not. My question is, if you don't have gold and silver and you're trading the central bank digital currency, which by the way has no debt limit because you wouldn't have the debt system, you would just be printing the digital currency, how does that support, the American people? How does that put a limit on the ability of the central bank to inflate, deflate? At least now we have the debt system and we have a pseudo debt limit, which always gets raised, but at least it's a debate in Congress for that to happen. In a central bank digital currency system, which they want to implement, not only in the United States, but in Europe, which is digital euro, and China with a digital yuan, it removes any sort of limits or governors on how much currency they can create and how much they can inflate the economy and print that currency. So I do think a lot of people want gold to be a part of that reset. I think the powers that be in the central banks want to be part of their reset, not the people's reset. So I think it's up to us to educate the people and say, get some of your gold and silver so you can participate in that, because I do think gold's going to be a big part of that.
So let's talk about how to attack this. There's a lot of equities around here. I know you spend some time talking about equities.
Yes.
You also balance with bullion, I'm sure.
Yes.
Drop some knowledge on the folks here. How does Robert Keynes attack things?
So what I always say is do your bullion first, because it's kind of the easiest to get. It's the lowest risk to get into the precious metals, and I think it's relatively speaking cheap right now, given the problems we have in the financial system. But if you want a leverage play, and you want the ability not only to preserve your wealth through gold, but to potentially get the leverage of what the companies will have that mine it when that commodity boom comes, which it is coming. That's one of my talks today, is talking about a 140-year cycle of commodities and how we're about to hit another big, long commodity cycle boom. You do that through the miners. The miners are the ones that pull it out of the ground. They're the ones that are going to make the lion's share of the money because they're the first to get it. They pull it out of the ground, they hit the market with it. Every step you go away from the miners, you get a little bit less return. So if you're looking for return, you go to the miners. The miners are historically cheap right now. I did a chart on my channel for the last couple of weeks, and I did this at another conference, the Gemini Capital Small Cap Kickoff Conference, where I talked about gold and silver have risen. The mining stocks have not followed them for the last 5 years. So the mining stocks are undervalued, even though these companies are making money hand over fist. Great quarterly reports. A lot of these companies I interviewed are saying we're having record quarterly earnings reports in the history of our company. First Majestic is killing it right now. A lot of these other companies are killing it, but people aren't putting money in. What does that mean? It means the stocks are cheap. And historically, when this happens, that reverts to mean the stocks will run faster than the actual precious metals, and people that get in now when it's cheap are going to make more money. So I think if you're looking for investment gains over the next 3, 4, 5 years, you definitely want to include some of these stocks in your portfolio. And there are tons of good companies here. I've interviewed probably 15 that we're going to put up through your channel and our channel. Tons of good projects, silver and gold projects.
So in closing here, how do people follow you? I know people need help maneuvering through this space. It's not easy. Getting a pro like you, Gold and Silver Pros, lay out your opportunity.
So goldsilverpros.com, or hit us up on YouTube or Twitter under Gold Silver Pros. Very easy.
Yeah. There you go. That's Robert Keynes, goldandsilverpros.com. Thanks for making the trip, Robert.
Appreciate you.
Appreciate you.
Yeah. Thank you.
Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.